The Reserve Bank of India's six-member Monetary Policy Committee on June 8 unanimously approved keeping the benchmark lending rates unchanged for a second straight time. According to RBI Governor Shaktikanta Das, the decision to keep the policy repo rate unchanged at 6.5% was taken keeping in mind that the MPC's cumulative rate hike of 250 basis points was transmitting through the economy and its full impact would likely keep inflationary pressures contained in coming months. Das had left the door open for the MPC to hike rates in future meetings, even as it has pressed the pause button on April 6th after hiking the repo rate by 250 basis points since May 2022. In its latest meeting, the MPC also decided by a majority of 5 out of 6 to continue with its stance of withdrawal of accommodation. The MPC took this decision to ensure that inflation progressively aligns with the target while supporting growth. The RBI got elbow room to maintain an extended pause on policy rates after the retail inflation rate in April fell to an 18-month low on the back of a high base and easing price pressures across categories. The consumer price index-based inflation stood at 4.7% in April, as against 5.66% the previous month. The headline inflation rate stayed within the RBI's upper tolerance limit for the second consecutive month, thanks to a moderation in prices of food, fuel, clothing, and services. The question now is, will the pause by the RBI lead to a pivot? A pivot would mean that rates have peaked and that they are likely to be cut in the future. It would also involve the RBI reversing its existing monetary policy stance. So, what do experts think about the likelihood of a pivot in the coming MPC meetings?
Well, we expect the pivot to start towards the last quarter of this fiscal year. And before, I think they cut interest rates in the January to March quarter, which is our expectation, I think they will also announce a change of stance.
If inflation is going to peak in this current cycle at, say, 5.4% in Q3 of this year, it looks very unlikely that at this particular point of time, the RBI would probably turn the pause to a pivot and start lowering the rates. So if at all there is going to be a lowering of rates, again, based on data on the way in which data looks, it could be only in the fourth quarter of the financial year.
While we will have to wait and watch to find out whether a pivot actually occurs, in the meantime, there are several factors that could delay such a decision. During the latest MPC meeting, retail price inflation for 2023-24 was cut down slightly to 5.1% from 5.2% earlier, on the assumption of a normal monsoon. While the MPC said that the India Meteorological Department's normal monsoon forecast argued well for Kharif crops, it also cautioned that the monsoon's spatial and temporal distribution would need to be closely monitored. The MPC also said that while crude oil prices had eased, the outlook remained uncertain. Just days before the MPC meeting ended, Saudi Arabia, the OPEC cartel's dominant member, said it would make deep production cuts of 1 million barrels per day starting from July. With regard to economic growth for the current financial year, the MPC retained the earlier projection of 6.5%. The MPC said higher Rabi crop production in 2022-23, the expected normal monsoon, and the sustained buoyancy in services should support private consumption and overall economic activity in the current year. However, it cautioned that weak external demand, geo-economic fragmentation, and protracted geopolitical tensions posed risks to the outlook. So, how does experts think these factors could affect any potential decision to go for a pivot or not?
Well, I don't expect the crude oil prices to rise too much unless there is a big geopolitical event, because global growth is slowing, demand is slowing, so crude prices will be less than last year. I think the worry is on the monsoon front, because there could be a risk to the overall precipitation from El Nino if it does play out. I think so that risk still remains, and food is a large component of our consumer basket. So in that sense, I think food inflation and the risk of monsoon, I think, is critical to me at this juncture.
The one major risk factor which is there today, which is holding back the Reserve Bank of India from lowering rates, is the possible effect of the El Nino on monsoon and on the agricultural crop. And we have seen also in the past that any kind of a crop failure, not specifically overall crops failing, but even maybe pulses failing, oilseeds failing, has the potential to increase inflation, which in turn could actually also justify a further increase in rates in case we do reach that kind of situation. But we can assume that the rate hike cycle is more or less done with. And the caution which we're talking of is only because of a very, very adverse situation arising. I don't think personally that it's going to be that bad. But yes, there could be a blip here and there which could keep inflation in this region of 5.5–6%, which in turn could mean even a more prolonged pause or no cut during the entire financial year.
To conclude, the RBI could opt for a pivot during Q4 FY24 if the monsoon is normal. But it may also have to look out for inflationary pressure arising from the possibility of increased government expenditure due to the upcoming assembly and general elections.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.